With the recent MBS report that highlights Nigeria's emergence from recession, we engaged stakeholders at the Nigerian Stock Exchange to discuss on the implications on the market and the Nigerian economy.
Second day receiving the news that Nigeria emerged out of recession. What is the mood? How is the market reacting to it?
Well, being in recession, out of recession, for us is about perception. But the figures that were released in 2016 that we have gone into a recession, of course the market reacted negatively to it. We saw the market dropping. Now the government did a lot. They tried so many things to see that production level increase, and when the figures now came out again that we are virtually out of the recession, of course it's a positive development, and the market has been reacting positively. In the last 2 days, we saw the market increasing and gaining. Yesterday 0.57 and today 1.42. So I believe with that perception that we are out of recession, is giving more and more investors confidence to be in the market. However, at the same time again, we're also seeing the likes of Guinness giving out good results, and that is also impacting positively in the market. So in all, I would say our getting out of recession has a positive effect on the markets.
When there were fillers earlier on around April that the economy was recovering gradually, the capital market responded, and we saw an upsurge in equities. There was rapid movement in equities up to a point where the market lost momentum. And then when the news came yesterday or so that the economy has finally recovered from recession and grown in the last quarter by about 0.55%, it was greeted very warmly by the market. The all-share index appreciated yesterday by about 0.5%, almost about the same level that the economy had become positive. And after trading today too, the trend has continued. The all-share index also went up by about 1.something%, indicating that the exit from recession has been greeted very, very warmly by the capital market. However, the real problem was actually stagflation, which was worse than recession. And stagflation being a situation where simultaneously the GDP declines and then inflation rate increases. And so we've actually been suffering from stagflation. But the critical part of that crisis has already been taken care of, which is recession. But we still have inflation. Inflation rate is still high, it's still above a single digit. And so the growth we have experienced so far is a growth that is tainted by inflation.
What should the government do in this regard to ensure that this recovery is sustained to massive inclusive growth?
Transparency. The government should be more transparent in all their action. And once the private sector sees that the government is transparent, it is obvious they will key in to all the government programs, and you will see growth in the Nigerian economy.
Most of the inflation we're experiencing is imported inflation because the economy is import dependent, and anytime the value of the domestic currency depreciates, that is reflected immediately in rising prices in the economy. And so the long-term solution is a structural solution for the economy that will make the economy less dependent on imports. And so that will reduce the pressure on the foreign exchange market, and that will stabilize the currency and probably firm it up. And additionally, if we are able to tackle the import dependence of the economy. It means that more wealth will be created locally. The economy will be stronger and more productive employment will be generated. There will be more products produced locally to satisfy our growing needs. So ultimately, that is the solution to arresting the rising inflation rate.
From the analysis, it is important that monetary and fiscal policies align for the sustenance of Nigeria's economic growth and development.